Welcome back. Time for today's three-stock lunch, and we're tracking three names around earnings. Salesforce reports after the bell, with Elliott nominating a slate of directors in their activist fight, and the stock still down 50% from the all-time highs. Best Buy is on deck for tomorrow morning, with retailers painting a mixed picture this earnings season, and they've slid 9% in the past month. And First Solar, we mentioned it earlier, but this one already reported, and it was a smaller than expected loss. Strong guidance, the shares surging 13%. Let's bring in Quint Tatro, Joule Financial founder and president, to trade all three. Quint, let's start with Salesforce. Are you a buyer here?
I am not, Kelly, at all. The stock is still too rich. I mean, it's great that Elliott's involved, and you got folks like Daniel Loeb behind the name now, but we really have to see how they're going to turn this thing around. I mean, it's still trading rich, 28 times forward, really only growing those EPS 18%. I want to see what they say about margins, cloud growth, all those things tonight, but until I really see an actual turnaround and how they're going to navigate the future, it's just not a stock that I want to be an owner of here.
All right. By the way, everybody, Salesforce CEO Mark Benioff will be on an exclusive interview with Jim Cramer tonight on Mad Money, 6 p.m. Eastern after those earnings.
All right, let's move on, Quint, to the next one, and that is Best Buy, which is out tomorrow.
This is a tricky one because by all metrics, you would look at this and find it probably pretty attractive, but I'm going to call it a value trap. 12 times forward, decent balance sheet. The problem is that they're expected to earn about $6 a share this coming year, but $3.52 of that's going to dividends, which basically means they don't have all that much, less than a 50% payout or retention to turn the business around and keep reinvesting. And also, we're hearing from more and more retailers that the consumer is starting to soften a bit. So this is a name that, even though it looks cheap and it has a decent balance sheet, it's still a no touch for me.
All right. No touch. All right. So that's, I think, a no and a no. So what about First Solar, Quint? Does this one have you interested?
So I really wish we would have done this yesterday because, I mean, I'm going to talk my book and people aren't going to believe me, but we are long First Solar and have been long for a very long time. And it's really nice to see this one shine. They obviously, as you mentioned, had a nice EPS beat. Revenues were in line. The guidance was strong. And, I mean, they're set to earn almost $5 a share next year. They've got a strong book value. They've been an unbelievable compounder. This one, from a technical perspective, breaking out of a decade-long base. So I think this name is a winner, is a new leader over time, as is many of the solar names out there are very attractive to us. I would not chase it here, but look for a pullback. It will come, and that'll provide a better entry point.
Quint Tatro, thank you, sir. We appreciate it.
Thank you all.
Three stock lunch.